Jobs, jobs, jobs. The UK economy looks to be booming. Good morning everyone and welcome back to Morning Markets. As promised, it's more of a focus on the UK this week. We've previously focused a lot on the US given all the survey data for the employment sector. Now it's the UK's turn, and this morning, hot off the press, it's the jobs data for the 3 months through to June. And it continues to surprise. The UK jobs economy is booming. Unemployment has fallen again and is now the lowest since January, surprising markets. And we're seeing jobs creation not just in full-time employment but also in part-time employment. And that's not just in employees but those who are also self-employed. So it's a great end point for the Conservative government to hand over to the new Labour government. And of course the context now is that the UK has lower unemployment than the US, lower inflation than the US, and higher wage growth than the US. So let's delve into the wage data in particular, given we know it's of acute concern for the Bank of England. Recall that this time last year, national wage growth was somewhere between 7 to 8%. This is much too high. And that was really being driven by the public sector, where the government of the day had given the NHS a one-off bonus. Well, these numbers have started to fall out of the year-on-year measure, such that annualised public sector pay growth is close to zero. This has dragged down the national number to about 5.1%. So this is a very encouraging trend. We've seen national wage growth fall from around about 6% to close to 5% in just 6 months. So this gives the Bank of England some crumbs for comfort, and they may be able to lower interest rates again by the end of the year. Certainly, probably not this month. It's perhaps too early. Now, what the main impulse we're seeing isn't just in the public sector for wage growth slowdowns, but we're also seeing some signs of cooling in the private sector. Whilst we didn't see any fall through the previous quarter, we should note that in the last 12 months, private sector wage growth has fallen from around about 8 to close to 5%. On that current trajectory, we should have a number close to around 4.5% by the end of the year, and that really should mean the Bank of England can lower interest rates materially. Now, the context here is that, as I said, the UK economy looks in great shape compared to the US, but apparently we've never had it so bad, and things have to get worse before they get better. Quite why government is taking this economic inheritance and making it sound to be terrible is beyond me. However, the backdrop is encouraging. The UK economy looks to have robust growth behind it, and that's been felt most acutely in the employment numbers. So that's all for today. It's great news for the UK and for the look ahead. Please do join us tomorrow where we'll focus in on some more of the US data. Thank you.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value and you may get back less than you invest.